Our April edition. I am Joel Johnson, Director of Financial Planning, and I'm joined today, as always, by my good friend Jake MacFarlane, our Senior Research Analyst. And as we let everybody in here this morning, we are doing something a little bit different today. We promised you last month we were going to do an AI focused presentation, and that's exactly what you're going to get today. So we're going to skip our usual market recap. I know there's a lot going on in the world. We touched on it last month. If you have any specific questions, always feel free to reach out to your planner here with FourThought. Happy to discuss that. But today is all about AI. So, as always, our disclosures here, we're a registered RIA firm. Everything today is for informational purposes only. We will be discussing a few individual companies, and that is also for educational purposes only. Past performance is no guarantee of future results. Always feel free to visit our website for full disclosures. And another reminder before we jump in, question and answer session at the end of today. We will be having one. This is a big topic for everybody. You can't throw a stick at an earnings report right now and not hear AI uttered about 58 times. So if you've got questions as we're going through this today, at the very bottom, you should see a Q&A button in your toolbar. Feel free to type in your question there. We will get to as many as humanly possible during our presentation. If we cannot, of course, we will have somebody reach out and make sure that your question gets answered. Again, if you are new to Coffee with FourThought, I'm Joel Johnson, Director of Financial Planning here with FourThought. Jake, good morning. How are you doing today?
Good morning, Joel. I'm doing great. Looking forward to today's presentation.
It's going to be a fun one. We went hard at work on this, trying to make it accessible for everybody. So let's go ahead and take a look at what we're going to be talking about today. So first and foremost, we're going to start with the foundation of AI. What is a large language model? How does it actually work? We're not going to be diving into a lot of the technicality behind it, but we want to make sure that you understand the nuances worth understanding there. Second, we're going to talk about the agentic shift in AI. What we had 3 years ago is very different than what we have today. What does that look like? Jake and I are going to spend quite a bit of time about the investment landscape. We know that's a big topic for everybody, and we want to make sure that we spend plenty of time on that. We want to talk about the risk and concerns that we have here at FourThought about the technology, how it's playing out, what are legitimate, what are illegitimate fears. We'll go through that. And then finally, we'll kind of touch on where we think we go from here. It's a wildly shifting landscape. Even between the time we put together this presentation and today, there have been huge leaps in AI. And so we'll talk about that, but we reserve the right to be wrong as it continues to shift over time. So I will go ahead and kick us off here, and we will start right at the beginning, which is just a brief history on what AI is. And contrary to popular belief, it really isn't all that new. Now, the functionality is definitely new, but this goes all the way back to the 1950s. You might have heard of the Turing test. This is when Alan Turing back then proposed his famous test, which is essentially can a machine fool a human into thinking that it's also human? And for decades, progress was incremental. IBM was a big player back in the day. The real inflection came around 2012 with deep learning. And then in 2017, you also had the team from Google, which actually published a paper called The Attention is All You Need. And that paper introduced the transformer architecture, which is the technical term and the foundation of every major AI model today. So ChatGPT, Claude, Gemini, which is Google's own model, all of them. They all function off of this transformer technology that was introduced almost a decade ago now at this point. Then you had the tectonic shift. That's what we had in 2022 when ChatGPT was the first model on the scene, and it was the quickest pickup in technology we have ever seen. It brought the mainstream overnight, and now by 2024 through 2026, we're seeing the agentic era, which is even different than what ChatGPT introduced 4 years ago now, which is astonishing that it's been that long that we've had these tools available to us. So a lot of history there, but again, it's not really new, but the functionality is really new here. And Jake, anything to add on the history? Was any of this a surprise to you when we were doing our research here?
Well, I think, when everyone thinks of AI, right, they just commonly kind of go to ChatGPT, right? And the truth of it is there's a lot more out there, number one, than just ChatGPT. But number two is that this whole process started well before ChatGPT was even a thought. And really, when we go back to like kind of that first step back in the 1950s, there's a great movie. It's called The Imitation Game, and it's about sort of how even like during wartime, these tests and these machines were starting to be implemented. So that's a really interesting movie if anyone's interested to sort of check out there. But I think, to your point, kind of the inflection point, the interesting point does come back in like 2012 with the deep learning revolution. And for those who don't know what that is, it's just basically when computers finally became better at recognizing patterns in massive amounts of data. And these are things like identifying images or understanding speech. Those like backbones are really what kind of spelled this journey to really pick up. And then the last thing that I'll mention here, as we get into sort of some definitions like agentic AI, right? Like, what does that mean? And when I think of agentic AI, there's kind of the past and then the future. So in the past, like the last year or before that, AI primarily was like prompt driven. Like ChatGPT is kind of famous for that right now. Even you ask it a question and it can give you an answer. And sometimes the answer is, better than others, and sometimes it kind of hallucinates on you. But I think now these are starting to kind of take it a step further. They can break problems down into multiple steps and even use like browsing or even use coding to sort of solve something and take actions to complete a task. And so when we talk about agentic AI, we're talking about the AI sort of starting to function more like a digital assistant or like a digital agent. And so that's kind of what we're talking about there when we think of like the next rendition of this.
Yeah, which is a great lead into what actually is a large language model. And you hit the nail on the head here, which is ChatGPT was sort of the first one that came out. And what it really is, it's a system trained on massive amounts of text. Sorry, not tech, text. And what it's doing is exactly what you said, was it's trying to recognize patterns. So in the way that we talk, the way that we write, it's trying to predict the next word that comes out. And it's word by word based on context. And think of it as kind of an incredibly well-read research assistant who's consumed virtually every book that's out there, article, website published, doesn't matter. They've got massive amounts of data. And when you ask it that prompt, like Jake was just alluding to, it's going and it's guessing mathematically what that next word is to get you that response. Now, when we see it, it kind of feels a little bit like magic because mathematically, the output's pretty darn good a lot of the times. When you look at the past and how people have talked it previously, you can kind of put together what a response to certain questions would be. And that's all that these large language models are doing. So it's not coming up with thought. That's a common misconception, I think. It personally was for me. It really is just a math-based algorithm that says, okay, user input this question, my output should probably look something like this, and then you get a really long answer, and mathematically, that's what should be the right response to your question. So that is what the large language model is doing. And what's important to know is that from an investment perspective, they require an enormous amount of computing power, not only to train them, but to also run them. And that's what's really driving the infrastructure spend for all of these major companies. You see the major models here on the screen: ChatGPT, Claude, Gemini, Llama, which is Facebook's version, Meta. They're all having to spend massive amounts of money, massive amounts of capital expenditures just to train and to run these models. Doesn't matter who it is. They're expensive. Now, there was a little blip there for a little while where we had the Chinese model that came out, and forgive me, Jake, maybe you can remind me what the name of it was. Um, uh,
Like
DeepSeek.
deep
Sorry.
seek, yeah.
Yeah, DeepSeek. Yep. When DeepSeek came out, there was a little blip in the market where everybody said, oh, you know what? It just got a lot less expensive. That really hasn't panned out, but we'll continue to see how that evolves over time. And then let's jump into the agentic shift, which Jake was alluding to here. And let's talk a little bit about what chatbots are versus agents. So, again, traditional AI was very much you put in a question, it answers one at a time. You're doing one task at a time. It's not really the most complex system aside from the responses that you're getting, but there's no memory between sessions. And they started to kind of tack onto that where you could open up your history of chats within these models that would help with that problem, but they really couldn't do a great job of going back and referencing all of that when they first started doing that. And then they also, like Jake said, they couldn't do tasks. They couldn't browse the web. They couldn't book a reservation for you. They were very rudimentary in what they were allowed to do. Again, it was just kind of an ask and answer, sort of a Q&A session that you were allowed to have. And they were, again, very good at what they were doing, but they were requiring humans to decide the next step. Then we move over to the agentic AI, which is where we are today. And this is where we are starting to move at lightning speed and lightning increases in the functionality of what these models are able to do. It is fundamentally different. These systems can reason. They take the multi-step problems like Jake was talking about, and they can use tools, the internet, they can execute code. So if you went to school for coding and you're an entry-level coder right now, you're competing with agentic AI. They can search databases, they can run Google searches. There is a lot going on with an agentic AI system versus the traditional large language model. And Jensen Huang of NVIDIA, this is one of the major three problems, which is shifts are happening simultaneously. So not only are we moving from CPUs, which is computing, to GPUs, we're also moving from traditional AI to generative AI, and now from generative AI to agentic AI. And so there's going to be a lot of change and upheaval as we continue to make these shifts. And again, they are moving lightning quick because of the agentic AI, which means that they're able to do tasks now without any input from humans. They're just able to work, 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 work. So that was a lot of talking for me. Jake, anything to add there?
No, you're so right. Like it is fundamentally different, and it opens a whole can of worms too. I mean, you just imagine like you have some sort of project that you want to tackle, and it involves kind of multiple milestones, if you will, to kind of get you to that end product. If you just plug that into like ChatGPT, kind of your traditional prompt-based thing, it might be able to tell you like how you should go about maybe reaching each milestone, and it might be able to kind of help you with any given milestone as you kind of prompt it to sort of help you. Whereas these agentic systems will go out and actually like do the work. It might even look over the different large language models that would sort of best help it execute some part of that task, or it might go and code its own application or its own database, to pull from to help complete that task. So it is, totally a game changer. Joel, as we navigate to the next slide, I think this kind of gets into like why this shift is why it matters and why it's important. I'll start and kind of go through some of these numbers that kind of back it. For example, Gartner expects about 40% of enterprise software to include AI agents by the end of this year, right? I mean, almost half of enterprise software companies. The market itself expected to grow from $8 billion today to over $50 billion in 2030, right? And that's only 4 years away at this point. What I think is most important, though, is when we look at the amount of AI usage, and it's called inference, has increased about 10x in just 1 year. And we haven't even really started to get this shift yet. It's certainly been talked about, and there are some early movers, but we haven't kind of seen it wholesale yet. And what I think is important, again, for us to kind of step back and talk about two words that are important when we think about AI. One of them would be training, and the other would be inference. So training is, the amount of time and data, et cetera, used to sort of get the model up and running. You like ChatGPT, they have a bunch of text, a bunch of data that they have going into it. They train up the model, get it ready to go, and then that kind of happens occasionally, like once, and then when another new version of it comes out. But inference is what happens every time you actually use the AI. So every time you prompt it, every response or task that the AI agent completes, and that's where the real demand is coming from. Each of these interactions requires a significant amount of computing power, and often they run on like specialized chips within the data centers. So what I think is important for investors is that this inference is happening constantly and it's growing rapidly, while training is kind of more one-off or periodic at best. And so I think when we got that data from DeepSeek, that was like, hey, China is able to train the models much more efficiently using less GPUs. Kind of turns out that that wasn't even necessarily true, but even taking that at face value, yes, it does make sense that the cost to train these models might come down. However, the demand for inference, in my opinion, is only going to increase and do so kind of exponentially based on the number that we're seeing. So that's critical because every time the AI is used, again, it consumes some computing power, some energy, and that is not really going to slow down, right? That's only going to pick up. So that means more chips, more data centers, and more energy demand that we have as well. But Joel, I'll kind of stop there and let you opine on that too.
No, I couldn't agree with you more. I think the tokens, the funner term for inference, right? Inference tokens. That's really what these models are using up every time you interact with it is those tokens. And I agree. I think the usage of those tokens is going to just continue to exponentially increase, especially as you continue to see enterprises integrate it with their platforms and their workflows. What'll end up happening, I think, is we're going to continue to have to buy tokens, and that's going to be mostly enterprise users are going to worry about that, but that's going to be cost prohibitive because the tokens, as there's more demand for them, it's a typical supply demand curve. The ones who are willing to pay more for those tokens for that compute are going to be the ones using it more. Right now, ChatGPT and Claude, they're subsidizing your and I use of it because they're charging us $20 a month, and you'll know, after you've used it a few times, you ran out of compute, come back tomorrow. That's because we're not paying up for the same amount of tokens that these enterprise level users are. So it'll be interesting to see how these models continue to work that landscape. And really, that could turn into its own market itself. Maybe you have a secondary market for tokens. You just don't know yet, but that's going to be an important factor as we continue to implement these things globally, not just here in the US, but really globally. Those tokens are going to become more and more valuable as chips try to keep up with the demand that's going to be coming along with it. So that's an interesting thing to watch. But that's all a great leadway into kind of talking about the investment landscape here. And Jake, I'll throw it back to you to kind of kick us off and talk about the infrastructure build out.
Yeah, I mean, right now we're sort of in a revolution right now. And if you think about like the size of this investment project that's taking place, I mean, it dwarfs every other major, if you talk about like the telecom build out, even, the Manhattan project, right? Like, um, what's it called? Like infrastructure in terms of like road, toll, like railways, right? Like all of these, even adjusted for inflation, right? This right now is dwarfing kind of everything else that we've seen. And what's interesting about it is that it's all being funded through private businesses. It's not really being publicly funded. So what we have here is a list of sort of the major tech companies that are investing heavily in AI infrastructure. Amazon, Alphabet, Microsoft, Meta, and Oracle. These numbers here, what they represent are the midpoint range of capital expenditure that management guides for in their earnings call for this calendar year, 2026. The vast majority of that is being spent on building out AI infrastructure. So even if we, think about this midpoint, maybe they come in a little bit less, maybe they come in a little bit higher, that is roughly double what we saw them spend from last year, 2025. And each one of them is saying the exact same thing. Right now, they're not demand constrained, they're supply constrained. So they, in other words, cannot build capacity fast enough. What does that mean? A company like Nvidia is essentially supplying this entire ecosystem. Their growth reflects that demand as well. And so these hyperscalers, they are spending an enormous amount of money that's benefiting some semiconductor companies like Nvidia, Taiwan Semiconductor, ASML, for example, name just a few. And they're banking on being able to generate a large return on investment for these projects. Right now, we're seeing some companies be able to do it a little bit better or quicker than others. But the big question is, how long can this level of spending continue? And will it actually generate those returns that these companies are expecting? We're in kind of phase one right now that's that's benefiting these hardware companies. But at some point, the shareholders for these hyperscalers are going to start asking questions. In fact, they already are. As Joel mentioned, you in every kind of earnings transcript, earnings call, AI is like the number one topic for not only just these hyperscalers, but almost every company. And rewind the clocks maybe a year or two ago, you mentioned AI in your shareholder meeting, and your stock gets a bump because investors are very very excited for those growth prospects and the buzzword. It really helped out your momentum a little bit. Whereas now you mention AI, and investors are a little bit skeptical on it, and they're saying, okay, that's great. You've been talking about that, but where's the profits that are coming from these AI investments? And so you start to see stock prices maybe dip a little bit even after, otherwise good earnings call, because investors want to see that proof, right? So, but the point stands, at least for the foreseeable future, these companies are still investing heavily in AI infrastructure, the build out of it, and that's going to undoubtedly benefit these hardware companies that are supplying those kind of pickaxe and shovels there.
Yeah. So jump right in for us, Jake. Talk about some more companies and just a little bit more specifics on what we're looking at here.
Yeah, these are some of the companies that we're watching. These are not investment recommendations. We own a good bit of these names, but we don't own all of them. Nvidia right now is the clear pickaxe and shovels play. It powers almost everything, but their revenue and their profits are highly dependent on the platform and infrastructure companies continuing their build out. They have made about over $200 billion in revenue for fiscal year 2026. That's their expectation. That would be about almost 75% growth from 2025, which is just staggering at that base to just be able to continue that amount of percentage growth. It's really just staggering. And it's not really something that we've ever seen a company be able to do and continue to do consistently. So they're one that certainly is a play on this build out continuing. They, are certainly the market leader there of those GPUs, those graphics cards and data center chips. But as we kind of broaden out, we see again companies like Amazon, Microsoft, and Google kind of being that platform layer. They're still building out the AI infrastructure and data centers. For Amazon specifically, the vast majority of their profits come from AWS, which is their cloud platform. It's roughly two-thirds of their total operating income. Along with, they do have growing contributions from advertising as well. And so how they're using AI, they're embedding it within those two businesses, and especially AWS, and that's driving growth and demand for that platform, and it's highly profitable for them. So they don't have exactly like a separate AI division that they're earning revenue on right now or profits, but they're using AI to benefit their largest profit driver of the business, and that segment itself is highly profitable, very very large margins. So that's kind of their play on it. I think Meta is a really interesting example of how AI is already translating directly into revenue and profit growth today. They have Llama, but really they're using AI to make their core advertising business more effective. And so how they're doing that, number one, AI is improving how content is recommended across Facebook and Instagram, their sort of web of social media platforms. That is keeping users more engaged and increasing the amount of time they spend on the platform. At the same time, number two is it's significantly enhancing their advertising targeting and the automation that they're using, which is allowing advertisers to reach the right users and to more efficiently generate better results of people actually clicking on the ad and making a purchase, for example. So that leads to higher conversion rates, improved return on dollars spent on advertising, and ultimately Meta can then charge premium pricing for advertisers to place ads on their platform. So again, rather than being a separate sort of revenue stream, AI is kind of acting as the engine behind Meta's existing business. Apple is taking a completely different approach, a slower approach, more measured. They've got lower capex or capital expenditure, but they have a massive distribution, as we all know, 2 billion plus devices. So it'll be interesting to see how Apple sort of navigates because right now they are sort of a laggard versus some of these other big tech companies. And then you have Salesforce, Palantir, they are trying to position themselves in this new AI driven world. For example, Salesforce and kind of software overall has come under a lot of pressure recently. And a lot of investors are asking questions about, hey, this Salesforce is a CRM, sort of a database that enterprises use to keep track of client data, tasks, projects, etc. And it used to be a business that was extremely sticky and had very high switching costs. If you're a large business, you don't want to switch to a new CRM because it's going to just be a lot of time spent and a lot of wasted effort trying to get that up and running. And so that, allowed Salesforce to not only have, strong growth, but also investors were willing to pay a higher multiple because this was a company they didn't really think could be disrupted very easily. Well, AI's sort of asking the question of, is it really though? Can an AI agent or an AI company build a better, CRM tool that businesses use that uses AI better and connects with other platforms that, the business uses? I mean, these are real questions that are being asked, but at the same time, Salesforce is kind of being a leader in using and integrating AI into their own software to, better their own projects. So, which will win out? These are questions that haven't been answered yet. And, overall, you see sort of a gambit of the types of companies that are either benefiting or kind of coming under pressure from AI. Ultimately, it's hard to foresee a sector, a company, a type of business that either directly or indirectly isn't going to be affected at some point. But right now, these are sort of the major players that we're looking at.
Yeah, I really like Apple's approach here personally because they're looking at it and saying, hey, you guys go build the models, you spend all the capex, I'm building all of this out. You've got to come home to us anyway because we've got 2 billion people using our devices, and you're not going to go out and try to rebuild that ecosystem that we've created. So they're an interesting one to watch. I think you've seen it priced in a little bit. You've seen their multiple over the last couple of years really increase from what used to be a hardware of like 18-ish times. Now it's closer to, I think, 30. Don't quote me on that, but I'm pretty sure. And then you've also got the Salesforce, which I couldn't agree with you more there, Jake. But the other thing you've got also is with Salesforce in particular, that was an extremely high margin business because of those switching costs and all the reasons that you mentioned. What are going to happen to those margins now that there could potentially be a new game in town and a lower switching cost moving forward with all of these new tools coming out? So it's going to be something to watch. You've seen a lot of market volatility around these names one way or the other because of all of it. One of the things that we just want to make sure that everybody's aware of is we are doing the fundamental research on these companies day in and day out. Jake is leading that effort. We're looking at whether or not we agree with these management teams on if their capex or however they're playing this game is going to turn into long-term profits for the companies and for us in investing in them potentially. So that's part of our job. And also part of that job is looking at the risks and the concerns that we have. And we want to make sure that we really talk about it. We've been hitting on this the entire time, but I think it's a good thing to bring up one more time, which is the CapEx question. Right now, it's a lot of expenses going out, and the bear case is real here. Spending far outpaces the current AI revenue. Microsoft's $25 billion in AI revenue looks modest against its 144 billion in CapEx. And it's a similar story across the spectrum of companies that are working on this issue, if you want to call it that. Are they going to be able to realize enough in earnings and profits to offset what is an essential expense for them at this point? And that's the biggest question that we really have. But then you have the other side. These companies are fundamentally stronger business models than, say, the telecom companies back in the early 2000s when we had the dot-com bubble. They're generating massive free cash flows already. they have been extremely high margin businesses. So they have a little bit more leeway in spending these dollars because they've been sort of building these war chests for a long, long time. We have not had a major buyout or major expense like this over the last probably 15, 20 years in the space. So it's allowed them to build up the cash and be ready for something like this. Now, Meta is definitely showing the clearest connection between revenue and the expenses, like Jake had pointed out. But we're going to have to continue to wait and see the global. So Goldman Sachs actually took a look at this. CapEx as a percentage of our GDP, so the national GDP, is still below the peak when we saw in the previous tech cycle when the internet really became big. So there's room to grow here still as a percent of GDP, and I think we're going to continue to see expansion. So I don't know if you'll agree with me on this, Jake, but I'm going to say it anyway. The spending is justified for now. They really don't have an option. This is coming one way or another. If they're not the company doing it, somebody might come in and eat their lunch. You can take the Apple perspective, which is you guys go build it. We'll just be your partner in it. So that's been working well for them. There's a lot of different ways to play it, but they don't have a choice but to spend this. So that's really concern number one there for me, at least.
Yeah, what I would just add to that, Joel, I couldn't agree with you more. That is for sure the biggest question that has the most immediate impact. And it's going to affect different companies differently, obviously. I mean, for example, like if this concern is true and these companies, these hyperscalers just aren't able to recoup their investment, let's say, they're going to stop, at some point, or they're going to slow down. And so right there, that's going to immediately impact the demand for NVIDIA graphics cards, right? So right there, those chips become in less demand. Their revenue and profits start to decline. Their multiple is going to have to correct, right? So that is sort of the most immediate demand. Most immediate risk there is with those kind of hardware companies that have led this charge and have done really well. So we've got to be careful there. However, it is difficult to sort of get the impact of what AI is having on these companies from like a revenue and profitability standpoint because it's difficult to quantify, especially for a company like Amazon, where it's like they are using their AI investments to help the AWS and their cloud and advertising businesses grow. So it's like, would they have achieved that growth if not for the AI investment? So some of those pieces are a little bit more difficult to kind of fret out. But to your point, Joel, like what's true about these platform companies like Google, Amazon, Microsoft, et cetera, is they have large, very profitable businesses that are kind of like their cash cow, right? And they're taking their kind of excess profits or cash flow and investing into this growth driver. It's a lot differently than, let's say, the telecom boom, where these businesses were just ramping up debt to make these investments that even best case, didn't have the upside that like an AI initiative had, and they weren't nearly as profitable with the same level of margins either. So certainly I would agree with you that the spending has to take place right now. Apple's taking their approach, and they're able to do that because they have the devices out there, and maybe they can recoup that on kind of the back end. But these other companies that don't have 2 billion devices out that everybody uses, right? They have to make the investment, and because otherwise somebody else will right now. And so yeah, I would agree with you there. I think let's move into the second concern, which is interesting as well, right? It has to do with software. And the narrative right now is that AI will just replace all traditional software, right? Like we've seen this effect in the market where over $1 trillion of market cap has been erased from this correction that we've seen within software stocks. For example, we pick on Salesforce, right? They're through February of this year, they're down 32% year to date, right? So just the first 2 months of the year, already basically a third of their market cap gone. The Palantir, sort of a similar one, they're down in a major correction over 20% from their highs that they reached in 2025. So if we look at the multiples on average for these companies, trading around 6 times price to sales. If we look at maybe the average over the last 5 years, it's been closer to 9 times. So right now, that is what I would call speculation, right? Like the investors are sort of inferring that this AI effect is going to have a negative impact on growth, on margins for software companies. And me personally, I think it's just gotten to be too extreme. Now, where I will absolutely cede ground is with a company like Salesforce. We talked about them, and they have this kind of this moat, this protective barrier because of their high switching costs, and that's allowed them to really have great pricing on their software package and have very strong margins. Where I do think, AI is going to have an effect is that in order for Salesforce to kind of remain competitive and be able to have this premium pricing without businesses looking elsewhere or maybe going down the AI route, is they're going to have to invest more into AI infrastructure themselves so that they can build it out in house. Right there, that's going to have a negative kind of impact on the cash flow that Salesforce has, to return to investors because they have to invest more in the capex. So right there, I do see that being a real concern is that, hey, maybe we have some margin pressure that comes down on Salesforce a little bit. Maybe they're not able to distribute the same amount of cash flow because they're having to just reinvest in the business, even to just kind of stay as the number one provider there. So, but I also think that there's, a path where AI becomes additive to Salesforce as well, and that they're able to use that and increase their prominence too. So, base case for me would be yes, AI is going to have an effect on software companies, especially those ones that they don't truly like own the data that would allow an AI company to kind of come in and displace them. But it's going to have likely an effect on the margins that these companies have and their ability to generate and distribute the same amount of cash flow. So I do think that, hey, maybe a discount to their average valuation in multiple makes sense, but I think we are also overblown at the same time, and it's going to have a case by case impact. And right now, all software companies have just kind of been thrown out, and really there's going to be winners and losers in this space. But Joel, really interested to get your thoughts on this too.
Yeah, I agree with you. I think it's going to be a case by case basis, and that's what leads to this, which is where do we come down on all of it? And it's not the dot-com bubble. We're seeing a lot of expenses right now. You're seeing, jokingly, we call it the SaaS apocalypse with names like Salesforce being cut, by a third. You've seen multiple compressions. But these companies are still generating real revenue and they're still generating real earnings. And we take it on that case by case basis because that could change over time. And so you want to make sure that you're focusing on these individual companies, their use cases, and the projections for what they're seeing as a player in this overall agentic AI world that we're moving into. I think software is going to continue to be a very interesting point because if you don't have that moat, like you were talking about, if there's not that special sauce that these companies have that somebody's not able to come in and easily take over overnight, I think you are at risk. These agents are getting very good at coding. They're going to continue to improve. They're now even coding themselves, which is a terrifying notion. So it's just going to continue to compound on itself. And so, again, our view, real earnings, but real risks. And that's why we really, at the end of the day, still believe that fundamental research and analysis on these companies across the spectrum is at the end of the day what'll keep you out of the hot water and hopefully lead to good long-term projected returns. And so where do we go from here? Let's bring it on home and we'll go through this a little bit quickly just for the sake of time. Make sure we spend plenty of time with our Q&A session. But Jake, talk a little bit about briefly how we're positioning client portfolios today.
Yeah, we sort of think about this in three layers when it comes to AI. We talked about the first layer being infrastructure. Like right now, this is our highest conviction. We're still having a good amount of positions within what I call kind of the semiconductor value chain. There are more companies than just NVIDIA that are involved in the production of the chips that allow these hyperscalers to build out the AI infrastructure. There's companies like ASML, Taiwan Semiconductor. They're involved in sort of before, NVIDIA even gets involved, like building the chips and making sure that the semiconductors, that there's enough transponders on them, and it's really advanced technology that allows these ultra highly compute chips to even be processed. There are companies that are within like quality control of these chips to make sure that they're being produced correctly. And even one little nanometer of an error can cause an enormous mistake that happens across millions of chips. That's a big issue. So there's a lot more companies than just NVIDIA who are benefiting from this infrastructure build out. We want to have positions there to benefit from that. The second layer would be kind of those platform companies. We still have major positions here, and we had major positions before this AI revolution in the Microsoft, Amazons, et cetera. These are the cloud providers that again have very strong cash flow businesses that are taking this investment, and we think that it is going to work out for them. And so we're staying invested in those platform companies. It's kind of a growing conviction for us because we are sort of taking a little bit of like a wait and see on those AI investments, but we have strong belief in the management companies at their ability to allocate capital and be good stewards of capital. So right now, that's a those hyperscalers where we're still invested in. The third layer would be the applications, and we're being really selective here. These are kind of that the software level. Again, we think that some companies will benefit and others would be disruptive. The problem is that with how quickly the rate of change is happening for these AI tools, it's really tough to get any sort of view, into even the near future for some of these software companies. And so what we're doing there is we're being selective, and for the positions that we are taking, we're keeping those positions smaller such that the risk on any one company, isn't extremely high on any portfolio. And the key there is diversification kind of across the value chain and not just betting everything on one outcome. We think that is really a way to get yourself in trouble here because there's going to be a lot of companies that benefit. There's also going to be some losers too. And those losers could have a really, really difficult time and be very, very challenged or even brought to completely obsolete. There's sort of a range there of outcomes. And so what we're trying to do is, diversify our portfolio, still be able to benefit from this mega trend that we believe is real, has legs, and will continue to grow, but also not put it all on any one outcome, any one company, even any one AI solution. There's going to be, winners and losers there. So that's sort of how we're positioning from a macro level.
Yeah, we thought it'd be fun to kind of give you some insight into how we're using it here at FourThought too, because we don't want to be Luddites. We know that it's affecting every single industry and it's even affecting ours already. So just some of the things that we're doing internally, we are using it as a tool for research and analysis and just helping to speed up that process. Even if you're using this at home, and this is something we take very seriously here, when we do this, we verify every single source. Because if there's one thing you will notice when you're using these models, they are extremely confident when they are wrong, and they do get things wrong. So just make sure that you're taking that, but we do it all the time here. We're talking about investments with it. Again, just kind of on the research side of things, client deliverables. This presentation actually took all of the information that we fed it and it edited it for us. Now, there were some other things that we had to do. It wasn't just an immediate thing, but it did a pretty darn good job putting this presentation together for everybody to enjoy today. And what would have taken us hours and hours to put together, we're able to use these tools to help us along that road, I guess you could call it. Where we don't use it, financial planning advice, investment advice, anything where it actually takes human input and human intuition to still derive an outcome, please, please, please be careful. I tell this to all of our planners here. We do it on the investment side. Like I said, it is very confident when it is wrong. And if you don't know what you're looking for or the right question to ask, you could be getting some bad information. If you ask for a date in ChatGPT to this day, it still cannot figure out how old you are. I don't know why. It feels easy to me, but it's living in the past, literally. That'll continue to get better, but even to today, it's not something that we're comfortable with. Tax and estate strategy. Again, we're starting to see this more and more, especially with younger generation. Again, just please be careful. Always be making sure that you're getting professional advice. I hope these models get better about pushing you to a professional when it's needed. And this will continue to change, but this is where we are today. And so, finishing up our key takeaways here, AI is real. And this is a shifting landscape that is ever faster with these new agents coming on board, writing themselves. The infrastructure build out is something we need to keep an eye on. Jake, I'll let you take these final two as we bring it home and move to the Q&A.
Yeah, agentic AI is the next phase. I mean, it's here now and it's going to continue to grow. And so we have to be cognizant of that. Lastly, the risks are real, but they are also manageable. And right now, we got to be pragmatic, and we need to not be overconfident in our ability to predict. Right, we have to take in the immense amount of data that's coming in on all these different fronts and be able to organize it, synthesize it. And so, in that case, diversification, position sizing, and selectivity are essential for us.
Absolutely. And with that, folks, thank you so much as always for joining us today. We hope this was helpful. We're going to move to our question and answer session now. But before we do that, as always, if you think that somebody would benefit from hearing these conversations with Jake and I, we do it every single month, first Thursday. Feel free to reach out. We'd be happy to add them to the list. Thank you again for joining us, and let's get to those questions.
All righty. Well, good morning, everyone. Just gonna got a couple questions here, and I see some others flowing in. Real quickly, Joel had to jump off today to get to a client meeting, so we thought we'd bring in James Stamper here just to avoid any confusion. You see his name tag, Jake MacFarlane. There's not two of me. The AI has not gotten quite that advanced yet, luckily. But James, thanks for taking some time here. I'll go ahead and
Sure.
throw you right in. We got a question here into sort of how you specifically are using AI to help with financial planning, with some of the research that you're doing, and then I'll sort of opine on that when you're done on kind of what I'm using it for myself and what our teams use standpoint.
Sure, Jake. Thanks for having me. And yeah, we'll jump right into the question. That first question, just in general, how's FourThought using the AI tool? We've leaned into AI as much as we can for a lot of what I would consider the mundane tasks that we all have in our unique positions, whether it's in our research, our client service, or myself front facing as a lead planner. And I can personally speak of at least 8 to 10 hours of, I would just consider it writing, research, and just thinking, just general thinking about planning that I have saved by leaning into AI. And when I think about how efficient that's made me, that allows me to focus more, be more responsive to clients. And I just find that we're just getting started, of course, but I've already seen a call it 20% fold of time given back to me in the course of the week where I can, focus more on what I do, which is planning. Yeah.
No, that's really great. I can kind of see the same exact use case too with a lot of what I do and a lot of what I see on the investment and on the research side. To get into some couple specifics, there is more AI capabilities in a lot of the investment analytics software that we have. So we are subscribers to FactSet, which is just a global research environment similar to like Bloomberg. And right there, as I'm following companies and they have their earnings calls, they actually have an AI tool that goes over the transcript and the words that are used, and they're able to sort of connect it to positive or negative connotation to even just from a sentiment standpoint based on the words that are said and even like the tone of it. So there's also a great use case there. And again, some of the getting the mundane work done. For me, it might be as I'm understanding a business or a company, there's packages like with ChatGPT, let's say, where we can just upload a company's 10K or annual filing just to get a better understanding of maybe what the business does, what their technology is, what their kind of competitive advantages are. And then also, tools like Grammarly or things where we're just sort of improving maybe our writing or even dictation software in a client meeting. These are all AI tools, and I agree with you, James. Right? Like we're not making any recommendations, or we're not letting the AI tool make recommendations on our behalf. We're just trying to streamline those sort of inefficient processes so that we can spend more time doing, the real deep thinking or the real planning and analysis based on either investments or financial planning. So that's a really great question. And we've got another one here too. I'll throw this over to you, James, and then again I'll sort of chime in. But the
Sure.
question is that the focus has largely been around the AI infrastructure companies like NVIDIA's or the models like OpenAI, Anthropic, some of those companies. But going forward, applied AI is going to be more important. Talking through software markets, or it can be AI sort of creating new industry opportunities, like maybe within healthcare advances or the industrial capacity. Could you kind of walk us through some of those future opportunities and how we kind of view those from an investment standpoint?
Yeah, yeah, it's really a thoughtful question, and there's a lot to unpack. So I'll just kind of go step by step. As we talked alluded to earlier, both yourself and Joel had spoken to kind of where we are in the maturation of the large language models, that we've come out of this training and we're into this inference, and actually now we're into reasoning. And that transition has huge ramifications, because as we get closer and closer to frankly super intelligence, along the way there's a whole host of opportunities, and we're going to see AI kind of come out of the cloud and transition towards what's called edge devices. And I think you'll probably see it more in your urban settings, and then it'll spread to the suburbs. And what I mean by that, probably one of the more visual things will be autonomous drivers, like the Waymos and things that we're already seeing, where you can call an Uber now and decide if you want a human driving that or non-human, and that's happening as we speak. And really, the data is already there to support that autonomous driving is safer than human beings who are texting and driving. but
Sure.
but truthfully, the data is there now. It's the licensing, it's the legal adoption of this, and our folks getting comfortable with it. But that's going to happen in real time, and then you can imagine an easy transition from, oh gosh, man, I don't want to be setting in traffic. Vertical takeoff and landing is going to be the next graduation of that, and you're seeing that already with folks who can companies like Joby, who are out there, and other folks that are right now just the biggest hurdle is going to be the FAA licensing, because the technology is rapidly improving to make autonomous flying vehicles and autonomous driving vehicles safe. And it's that's one example of what we're seeing as far as the maturation of AI. Second would be robotics. If you look at any of the modern tech conferences, they're just full of startup robotics companies of all types. And so most of those are certainly in their early development, private companies, but that's rapidly developing. I think China certainly is outpaced the United States in that, but it's happening. It's happening pretty rapidly. And then when you talk about some of the really positive things of this AI is potentially curing some of mankind's worst diseases, cancer, diabetes, these types of things that potentially have a real solution. And AI is going to have a huge hand in that. And so all of those are happening, and the pace, it's frankly hard to keep up. So our research team, which is headed up by Jake, we are as busy as we've ever been looking at not only disruptors, but also companies that we already own today that are leaning into AI and almost self disrupting their model and challenging themselves. And really, the agility metrics of a company is as important today as ever. Are you able to be agile and lean into this technology revolution? Yeah.
That's really well said. I couldn't agree with you more there. Just to add on to that too, with some of the data that we track, we pay attention, whenever JP Morgan puts out a really large kind of investment piece together, and they've had one just about AI, but also just in the general market commentary, AI has undoubtedly become a big focus on what they have posted there and some of the charts that they put out. One that I just thought was really interesting. I sometimes like to get the current number and then flip back to a year or two ago to kind of see where we're at back in time. And one piece was we talked about like 40% of companies are expecting to use either agentic AI or AI into their business environment in 2026. When I looked back 2 years ago at that number, that was only at like 10%, and a lot of it was driven by sort of tech and tech adjacent industry. So to see just that rate of change and the rate of adoption, you can just tell that even in your non-tech heavy sectors, you're going to start to see some changes there from these processes. And it doesn't have to be cutting edge. Doesn't have to be finding the cure to cancer, right? It can just be adding efficiencies here and there to help you do sort of your job better and better serve your end market. So I think it's really it's happening now, as you said, James. I just couldn't agree with you more. And again, we want to keep these to right around an hour, so we got time for one more question. James, I'll throw this over to you. I've got some thoughts too, but when we think about like a bear case, and one of the major risks that we pose was that right now these the AI infrastructure is just so supply bottlenecked right now, and there's so much demand, a lot of it being from those hyperscaler companies that we talked about. And one of the risks is like, hey, if those companies decide that, hey, we're going to pull back, we're going to really reduce our capital expenditures. It seems like in the market recently, these companies have been kind of penalized by their stock prices going down as they've announced, that they're going to either keep up or accelerate their capital expenditures on this build out. So if that falls off, then companies like Nvidia and some of the other semiconductor companies could really be in trouble. But the question is, there's still a lot of pent up demand on the inference side in this agentic build out that's going on. So will, other companies, especially, maybe in the private sector or public companies that aren't included in those hyperscalers, will they be able to kind of fill the gap if that kind of risk does come to fruition?
Yeah, yeah. Again, great question. A lot to unpack there. I think we're in this, to quote a great movie line. If we build it, they will come, right? And that's kind of where we are right now. Is the hyperscalers have realized, number one, the amount of compute that we need is it's hard to understand the exponential need of that in the just a massive scale of compute. So the spending in the minds of those who are spending it, they're ultra optimistic. But to your point, the market is saying, "Hey, where's this? Where's the revenue movement? Where are we moving the needle on all this spending?" And of course, I think that tug of war is going to continue until looking at it a more optimistic side, that revenue starts to really show up on the bottom line. So I think you're going to continue to see that. I think you're totally right on the bear side. If all this capex spending doesn't eventually start to show up, I think investors, both retail and institutional will get a little impatient, and that you can start to see a little bit of that occurring, right? Um, so yeah, I think in general, I think it's that tug of war that's happening right now. Where I see, you talk about bottleneck as well. When you look at some of the crucial companies that were on our presentation today, there's a couple others there, like Taiwan Semiconductor and ASML. These are two critically important companies that have different roles in the chain of producing these large language models ultimately. But every potential chip and every potential machine that ASML and Taiwan Semi can produce are already spoken for several years out. I mean, it's just the demand; they can't meet the demand. So I think our strategy of going after the hardware companies that are crucial to this has worked, and at least for the foreseeable future, it looks like it's going to continue. Um, Jake, I'll kick it back to you for any thoughts.
Yeah, I would tend to agree. I think if we think about maybe a worst case scenario, it's highly unlikely that all the hyperscalers would just pull their investment down to zero overnight. These are really strong capital allocators from the management teams and very, very skillful and good stewards of capital. So I don't see that happening. But if there was a major slowdown, I do think it would be buffeted by some maybe the other players that aren't getting heavily involved right now because they sort of can't, James, to your point, like there's a backlog of multiple years, at this rate. But I also think that, there may be more of them. They just don't have the deep pockets like these hyperscalers have right now to be able to commit that number of dollars in capex. So I do think that it would send probably more of a signal to the market more than anything, and maybe these companies maybe get repriced a little bit. And again, that's in a very poor scenario. So that's why we still are convicted and have conviction in this area and continue to invest there. So with that said, James, thank you again for joining us, and to all of our clients or investors at home watching. We really do appreciate you. We hope that you could take a nugget here or there, and if you have any further questions, feel free to email us or give us a call, and we would love to go ahead and answer that for you. So again, thank you so much, and hope you all have a great day.
God bless.